request, going to have a look at gold and silver in this video, as well as raking over some of the FX movements. But I think we cannot ignore what happened on Friday with that payrolls number. So let's just jump in and take a look at that and the connotations of that, and because I think it's all going to have a bearing on which way the metals go in the short term. So I don't think you can talk about any macro situation in the markets at the moment without acknowledging what happened on Friday, which was, of course, a very, very strong payrolls number. So, you can see it here that the unemployment rate actually fell to 4.1, 254,000 jobs created. The earnings, which is, important in my opinion, up 4%, so forecast up 3.8. That should send a few shivers down the spine of the Fed, I think. I mean, a number like that, it just makes me think, why did they go 50? So they did, but would they have gone 50 if they knew this was going to happen? Well, probably not. So JP Morgan, Bank of America no longer see half-point rate cut in November. I mean, the fact that they were calling for another 50 to me is just really surprising. But of course, this number has thrown the proverbial cat amongst the pigeons, and now we've had very, very big moves in the market. So this is the front month secured overnight financing rate. So the old Eurodollar futures, and you can see the size of the move that's happened here. So, we were sitting at 95, 93. The market has now dropped, quite substantially, down 25 basis points. So what that effectively means is when we're sitting here, this was pretty much saying it's not quite the rate by the end of the year, because it's carried forward. So it was saying effectively that the rate by probably March next year, because these futures contracts expire in December, and so they are reflecting the expected rate for March next year. So where they were saying 4%, which is basically 100 points a cut, look, the easy way to look at this is it's basically they've wiped out 25 points worth of cuts in the near term. So while they're still aggressively priced, that number has certainly cooled the jets of the rate cut crowd. And, that's had a very broad effect on the rate market. I mean, this is the 10-year bonds, and they've effectively added 11 basis points. So they're, this is the highest they've been since August. So, it's been a very, very big move. And then, at the front end of the curve, it's been even more pronounced. So, the 2-year bonds here, they were at sort of 3.71, and they've closed out the day at 3.9. So, that's 20 basis points they've effectively added, over 20 basis points in a session. So that is a huge move. And that, of course, has had implications for the dollar index, which is now broken out of this sort of this pseudo range we're in to the top side. So this has taken me a little bit by surprise. I didn't think, always expect the unexpected, but I wasn't expecting it to break up. I was expecting it to break down. But hey, look, I also wasn't expecting a 50-point rate cut. So I think what this tells you is the market was badly positioned. Coming into that, well, not just coming into that number, you could see you could see it building, right? But this has just put more fuel on the fire, as people will probably short the US dollar and getting caught offside. So just coming in here a bit sharper, we've had 5 up days in a row, so this will click over to 5 when the next bar opens. So we're kind of 50-50 here. We've been up, this is going back since 2000. We've been up 5 times in a row, 89 times, and it's 50-50 as to whether or not we get a 6-day up. But what I can say is, just looking here, 6 days in a row, if we're up for a 6th day in a row, the odds of being up for the 7th start to decrease pretty drastically. All right, so what I'm saying here is that this is probably getting pretty close to running out of puff just on this run, and we just might need a down day very shortly. So previously we were talking about how we could see that the euro was struggling in this area just around this 112, and so now it's beginning to puke. So it has got double jeopardy going on now, in terms of you've got a weak Europe where rate cuts are becoming more and more of a possibility, well, rate cuts sooner, mixed with a market that has to retreat away from its Fed rate cut view. So we've blown through the first retracement, you come down to the next pivot, we're into the next zone. Okay, so We will see. Maybe it's going to come down enough to retest this trend line. Um, you know, we'll see what happens there. It's still a long way down, but of course the ultimate, you can keep going back to these pivots, but we're still a long way to go. But this is certainly reflecting, the current state of the market. So we'll just watch this as well for any signs that it starts to bottom and the US dollar starts to weaken from this current rally. And then just quickly looking at the dollar yen. I mean, obviously it's had a big move. So we had the big election sort of dump, but that got shaken off. But now it's sort of not so much about the yen as much as it's about the US dollar. But we've got this old top coming in here, so maybe we just pierce this. But you would think, or I would think that it's going to start to run into a bit of resistance here. So that kind of ties in with the idea that the US dollar run up might soon be coming to an end. Well, just for the meantime. I mean, it'll take a bit of water to go under the bridge before they digest it all. But we're just looking at all this as a broad context for what we think might happen for gold. So let's just jump over to gold and silver now and see what's going on there. So just taking a look at gold, we're talking last week about the two types of corrections that we thought were likely, and I was thinking that we were possibly going to be more likely to be going into a range. And so that's proven thus far, okay? But the only thing now that I'm wary of, I'm certainly not interested in buying this in the short term. I think I said that last week. I wasn't going to be a buyer around here, but that payrolls number has certainly made me think there is now a strengthening possibility that the market may want to come back now and test at least this first retracement level. So what we might end up here is a combo of the sideways and the sharp. Okay, so what I mean by that is you might get this sideways maintaining, and then all of a sudden it just has a bit of a dump as that US dollar just pushes on things a little bit, because it's gonna, even though I maintain the bullish bias overall, that US dollar and that payrolls number is just going, the way that's going to strengthen the US dollar as everyone gets pushed out of their short US dollar positions. I just think it's going to have a bearing on gold. So, this would be the sort of thing that I'd be looking for. I mean, going short here, yeah, there's probably a trade there, but you'd have to be pretty careful. You'd want to keep your stops pretty tight, because even though you could possibly, we'll just come in here to a bit of a shorter time frame here. So even though you could possibly, maybe try to sell a break of this, a little break of this. Looking for something down here, it's dangerous. There's no doubt about that, because you are still going against the overall trend of the market. And look, even here, I mean, we are just on a 1 hour here, but even here you can sort of make the argument that we are trapped in a little mini trading range here. Okay, so yeah, like I said, you could hazard. Yeah, well, maybe it's difficult to form up that range. Say that's the range. I mean, you could hazard a break of the range and sort of look for this, and then if you were going to do that, you could sort of frame it up like this, or if you widen that out, then all of a sudden, so if you're looking at this as the range and you're selling the break of this, well, the 100 sits right down on top of the main 50. Okay, if I just do that, so there probably is a trade there if we get it, but be warned, if you're trying to sell this break, it is still dangerous, even though the market is starting to show signs of running out of gas here on this last rally. And like I said, those macro forces are certainly not conducive to gold exploding up next week, which isn't to say it can't happen, but it's got some headwinds, I think, in just the near term until the market digests that number. So look, for me, because I'm a maniac, I would probably do this trade, the break of this, looking for that, and then if I got that and then took my profit, I'd then sit back and rethink about it, because I'd want to see if the market can get down here. I'd want to see how it starts responding in here, because there is the danger it could slip even further and come down here, but this still remains the main point of call. So 25.80 down to 25 sort of 50, that's where I want to see how the market responds. If it starts finding its feet there and going into another trading range, then I'm probably starting to go back onto the long bandwagon and looking for the next move back up. So just jumping over to silver here, this is where we were. This is sort of not quite done what I thought it would. So we did just puncture up here and make that new little high, and that would have just been over payrolls, just bloody disaster sort of price action. So it does shift the retracement level a little bit, but we're still within the same sort of zone. Now, quite interesting now, the 61.8 sits right on that low. Okay, so right there, that becomes very, very interesting to me and tying into these tops. So will silver retrace? Well, this is what I was looking for, but it's not panning out that way thus far. Okay, so what we might actually get here is some sort of maybe an expanded flat where we got the top here, and then the third wave comes down a lot further, and you've got a flat that blows up a bit. So I haven't really changed my game plan here, other than that the market made that new high. Okay, so I think I said I wouldn't be a buyer, and maybe you could have hazarded a buy, but I think that top, that would have been just after payroll, so that just looks like market fuckery to me. Yeah, I mean, even just the size of these sort of wicks coming in here, that looks like a classic case of people have gone short over after payrolls, which kind of looks like the right thing, and then they've just squeezed the shorts and popped them out on a stop, and now the market's just sitting there. So, could you hazard? I'll just come back out here. Could you hazard a short with a stop above here? I mean, you probably could. It just depends on your appetite for risk, because once again, you are still going against the trend of the market. So, I mean, just looking at there's nothing super untoward going on with the RSI. So, in terms of momentum, it is still there. You've got a little bit of divergence here, okay, between here and here, but it's not big. It's only small, okay. A lot of that will be due to the fact that we've had these down candles, which has just dampened the indicator the way that it was put together. I'd probably be searching for a short opportunity here, looking for it to get back to this sort of area of $30.30 down to $29.70. But what the trigger for that is, I really couldn't say at the moment. I think it'd be difficult to initiate a trade below here, because I think the risk reward on a break of this low is not good. So you could just observe this on a short term basis. But even though, I mean, this is a mess, right? So even just looking at the trend structure, maybe a break of that low, this last low here, that would be your point of call. You could try to get a short into there, but once again, the risk reward there is not very good. It wouldn't even be 1-to-1. So look, I'd just sidestep this. This looks too messy for me. There's nothing clear here for me to get involved, other than to say I'm expecting that move down. So we will just see what happens. So look, I'll leave it there. Let's just see how the market digests that number, because it was big. It did cause a big wave in the market. We will have to see how the dust settles, but we will, and then we can make a decision on what sort of plan we would like for next week. So thanks for watching, and I'll see you next time. Bye for now.